Yeah, she's over this discussion now.
Roll call.
Here.
Alan Bush,
Here.
John Griffiths,
Here.
Brett Dennis,
Here.
Tammy McCaskill. All right, we have four.
Okay, so if we can then call the meeting of the General Employees Retirement Plan Committee together or to order at this time, have roll call. Have all of you had an opportunity to review the minutes from the previous meeting? The meeting of 9/21? If you have, and if there's no question, can I have a motion for approval?
So moved.
Any discussion at this point? All in favor?
Aye.
Any opposed? Okay. Mr. Chambers, the BCA report.
Get to page 8, an update on the firm, there are 11 of us. We're downtown. Dollars primarily in pension money. Florida being the main area, Texas, California, a little bit in Alabama, but mostly here. I started the firm 33 years ago. You're one of our oldest clients, and we appreciate the business. It means a lot to me to still come to Palatka.
Even if you have to drive 2 hours.
You know, I was born in Orlando, in this town, Orlando, 1950s. It's a beautiful town. It's not going to stay this way. As Jacksonville and the whole area just sort of gobbles you up. But I love the town, love the people, and we appreciate the business all these years.
I think we can say we appreciate your firm's guidance and service to us over the years that I've been familiar with it anyway.
Well, thank you. So, AJ, big picture. Currently have a, you're down to a return expectation for next year of 7.4%. For most of the past 10 years, we were budgeting closer to 8. Mr. Bush was on the board previously, we were 8.
Late almost every year that
Huh? Yeah, and then with pressure, the recommendation for urging, or nudging from your actuary, you got to gradually moving it down, but we're down to 7.5, 7.4. FRS is at 6.8, and probably be in the lower 6s, 6.2, 6.5, probably next year. Now, I'm not an actuary. The only thing I can talk about is the investment experience. Did you engage actuaries in this first study? That's what.
We approved it. Do we actually get it done? Do we get it?
So, just to throw this out. Well, one of the things the actuary looks at, not only do they look at salary growth, turnover, they look at investment experience. And your investment experience has been better than what was budgeted. And so the 9.2 for 10, 9.1 for 5, these are long-term averages are well in excess of what was budgeted years ago. So that's a good thing. Your mission was to achieve 8 or better, and then the bar was knocked down gradually to 7.5, and now it's at 7.4. So your mission is really to have the right asset next to your advice you get from me. And to defer expenses as much as possible. You've done that. And so there you have it. Big picture, mission accomplished. From the investment standpoint. I should also add, go back to the summary on page 4. that target, 60% target through the year, throughout the year. And we will periodically bring that. And since last year, and this year, just finished up, fiscal year 21 was a favorable year with equities. That using that methodology enables you to keep the returns right in line with the strategic model. I should mention the model has no cost. There's no frictional cash, there's nothing there. It's just a benchmark where the real fund has realities of timing of contributions and outflows and inflows, expenses. So for the 1-year period, the plan earned $3.5 million. This is your fiscal year, 8.3 net. Very much in line with the target. We do have clients that do a little better than this. The police and fire were right around 19 something, but they have a higher target equities. We have some clients that are 70, 72. Return from the 2022 area. So the return really was commensurate with the risk profile of your plan. And I think if you would survey across the state of Florida, you would find out that you are slightly more conservative, 5 or 6 percentage points of equity on the margin, than probably 80% of your peers in Florida. It's not 10, 15%. It's about, not a lot, but it's measurable. I don't have the 5-year in the summary, but you can see the 5 years on back to page 8. The average 5.1. Your actuary, Patrick, uses a 5-year period, I believe. This is the same in the police and the fire, 5-year. We did some little rebalancing in August to bring you back in line, as I suggested earlier. And the timing is good there because September was kind of a soggy period for equities. October was a rally month. November was another kind of soggy month. And see what happens. So on the manager comments, product comments on page 5, I think it's pretty self-explanatory. You have large cap, growth. You have mid cap, growth and value. You have infrastructure. I looked at New York, September. Home steers into their operation team. And I asked them, when was the last time a consultant came to see you guys and interview you? And they said March 2020. And my guy, in my business, we're supposed to be out there. The ghost town. I had to get those guys up and shaven and go over the office and turn the lights on.
What's the reason for that?
COVID.
Yeah, COVID. Totally COVID. It's that New York, a lot of beautiful restaurants are closed for
Yeah.
Now, if you go there, don't even go near the subways. They are
Yeah,
dirty, dangerous.
they've always been.
They've always been
Yeah,
that way.
I've been there.
But there's some stuff to see, right? I mean,
Yeah.
Brooklyn's nice. I mean, there's some stuff. to do.
Mhm.
Convertibles have been a real star here for you. Trying to remember the longer term numbers. Pacific, which is a fantastic product, is getting hammered right now because there's 25% exposure to emerging markets. E.g. China's getting busted up pretty good now. So the international manager exposure to China is feeling the compression. Top 10 real estate companies in China are essentially solved. You've heard a couple of the names defaulted, but China has some serious liquidity problems in the real estate sector. You've heard the Evergrande, big one that is now default on several of the
Mhm.
It's interesting because about 3 years ago, I was reading all of these recommendations from major Wall Street firms recommending emerging market debt. It's the last place you want to go. They're pushing it hard.
Hmm.
You don't have it. You have some emerging market equity, but no.
So the China thing, obviously, everybody's aware of the supply shortage, whether it be whatever the cause of it be. Is the manufacturing segment in China also experiencing upheaval?
So there are factors in China that have been in lockdown because of COVID. So China is enormous amount of speed and growth in their economy, really for the last 15 years. And they're now facing the reality that this can't continue. So they have shortages of oil and gas. They're the major purchaser of LNG, liquefied natural gas,
Really?
out of the United States. China.
Hmm.
Would you consider China a rival right now?
Yeah.
And guess who's our largest supplier of heavy crude since Venezuela's been knocked out of the picture and Canada's been the pipeline? Guess who's supplying us with the crude? Heavy
Russia.
crude.
Who?
Because they need heavy crude. When they make gasoline, all that light stuff from the Permian, you know. Hey, but they need the heavy. Number one source. Number one and number two. Make it easy.
Russia,
Huh?
Russia.
Russia.
Yeah.
What?
Mhm. What could go wrong?
Russia and Saudi are like back and forth as number one source of crude, heavy crude in the United States. We still import about 6 million barrels a day. We export blended products and nat gas, and so they add it all up and plus and minus and say we're energy independent, but we're really not. We still depend on outsiders to supply that space. To answer your question, the supply chain thing, on page 1, if you have nothing better to read it, but an article I read at the University of Connecticut, this guy nailed it when in March, April period of last year, the whole logistics system fell with drop in demand. Everyone was glued to the television and thought they were going to die, and no one stopped doing what they do normally. So the supply chain essentially laid off a lot of people. And it became apparent that that wasn't such a good idea. 2 months later, 3 months later, 4 months later, they can't get these people to come back because of economic forces that made it better to stay home. That's what it's saying.
Yep.
And what do people do when they stay home?
Shop and spend.
There you go.
Consumer,
And
yeah.
so we saw this spike in retail demand. So there you have it. We have a spike in demand for Chinese goods. And we don't have anybody to handle the loading and all that kind of stuff. The whole system broke down. Not to mention that the airlines, which move around 15% of cargo, they had a 90% drop in bookings, so the airlines couldn't take the slack. So the only thing that was left were the truckers. And they were already behind. I see a lot of trucks. You
Yep.
drive by?
Mhm.
A lot of trucks.
Going to see more, if I understand correctly, the relaxations that they're making in minimum age, experience, all that kind of stuff. Going to make Farrah and Farrah happy. Morgan and Morgan. Watch and see.
All right, so the couple of things that I want to mention, so on page 16,
But what, before you leave that topic real quickly,
yes.
what are your people telling you about any sort of improvement in the supply chain?
All I can tell so far is that it's stabilizing, but it's still massive backlog. There are a lot of ships that are on the west coast, 1,000 miles on ship, circling around, burning fuel, making meals, trying to keep everybody happy, but they're not. The queue is weeks, maybe 6 weeks, maybe 2 months to come in. So there has not been a rapid improvement. There was 60 minutes to the thing on this the other night. I don't know if you saw it. I thought it was pretty good, but I think that you have to condense it, make it quick so people don't fall asleep when they watch it, but I don't think they covered enough of the problem. But President Biden, executive order, top-down review of everything. That's underway right now, but I don't think you can regulate people's behavior. People don't want to go to work. If they have an enormous appetite to buy things online, you can't regulate that. And when you give people a lot of extra money, they're going to spend it. And you can regulate that.
And then when you start talking about raising wages and you put forces in play that basically require the private sector to raise wages to attract the individuals to work, you have a hard time complaining about a 7% rise in prices, don't you?
We have a little labor problem. I was one of the iron workers. I've done 7 up in Jacksonville in the plant. And the plant program, I like it. It's big. They can't actually work. For instance, you get $15 an hour. They don't want to work for 15 an hour. They've got a high school degree. They want 28 an hour. They're not going to get 28 an hour. And if they can't get it, they just walk off the jobs. They don't return. They don't come back to the. So there's a lot of weird stuff going on. I can't tell you why, but I can tell you that we mess these kids up something. Your mom is something too. They don't want to work. You want to get paid more than your worth.
Don't we all?
Yeah. You have any questions about the report, what we're doing?
The Euro Pacific Equity Growth Fund, what percentage of the portfolio is that?
Well, good question. I'll take you right to.
Been thumbing trying to find it, and I just haven't found it yet.
12. 2.3 million.
Where's that at on there?
State of Florida, let's put 25. Still well below your national. Your peers are.
It does, thank you.
The REITs have been a real industrial area, the multi-family area, have been the two principal drivers of this outperformance. The malls have actually begun to heal themselves. Simon Property, which is the largest mall operator probably in the world, reported robust earnings in the third quarter. People are going back to the malls. And the office buildings in the major metro areas have witnessed nice appreciation, even with all this uncertainty about tenants, because the replacement costs have gone up so much. Materials, across the board, labor, across the board, environmental costs, land costs, and of course, legal costs. Got to get the name.
Absolutely.
Yeah. So when you see a 30% return in among the REITs, usually roughly 2.5 to 3.5% on average throughout the year, that's like 27% appreciation. Now, that was on the heels of what happened in the first quarter of 2020, when the REITs went down about 35% in 6 weeks. All this news came out about COVID and WHO and no one knows what's going on with the UN and all this confusion. The REITs went down a third. Come back very next.
Our mall just sold, by the way, Alan.
You what?
The mall just sold.
Really?
Mhm.
Local? group?
No.
Somebody else?
Mhm. Have great plans for it, they say.
Let's talk about fixed income briefly, then I'll wrap it up. Interesting. Fixed income piece here. There was 261K left in the MBA. You can continue to tap that. But we have, of the 8.6 million, about 3 million of it is in intermediate bonds, which are the most vulnerable with rates going up. We have a high yield piece, which I think surprised everybody. In fact, high yield has been the best performer if you go back 10 years, 5 years. Of course, the 1 year, 10%. High yield represents, it's small. It's, it's 1 million out of the roughly 9, more than 10%. High yield companies are below investment grade, but when periods of economic expansion, accommodative Fed policy, growth, high yield does very well. When we enter a period of economic uncertainty and a recession on the horizon, high yield doesn't falling off. But we still like high yield. We don't see a recession on the horizon. Look, as long as it takes a year to get a motor for your boat, 6 months to get windows, and prices are going up, the economy is booming. And even if the Fed put a little bit of dust on the fire to slow it down, it's gonna take quite a lot of time. This is this economy super tanker. There's a lot of momentum, and it just takes a lot of time, even with Fed tinkering, to slow the ship down. The ship's not gonna slow down next year much. It's gonna take another, 2023, assuming that they really wanna slow things down. And by the way, when they slow things down, they're they take a brick and they throw it on a mosquito. It's there's nothing surgical about what the Fed does. They don't know how to do it very gingerly. And then you have a short-term product here, the 1 to 5 year, which is very defensive. So as rates start to go up, and we anticipate they will next year and the year after, because of the short duration of this product, it will do much better relative to the bond market, because the terms of these issuances are fairly short. Money rolls off, it's redeployed to next higher rate. So that's why the shorter duration works. So there you have it. You did get a 1.9% return for the fiscal year, which is right about average. If you wanted to do much better than that, you would have had to, this is an answer for you to help. If you wanted to get something closer to 3% for the year in fixed income and be right up there at the top, what would you have had to be emphasizing? You have some of it now, but you would have had to emphasize it a lot more to be closer to 3%.
I yield.
There you go. But that's not what we don't want to be in a junk bond program. We'll play a little bit of that on the margin to juice it up. You would have had to take a lot of risk. Fairly small amount of portfolio, so I don't think it was worth it. It would not have been a good idea. There you have it.
We're at minus 0.7% for the quarter. Right? Overall?
Probably for the first 9 months of the year, it's not a meaningful number for you, so but you're probably somewhere around 9% the first 9 months of the year. The quarter we're in now is slightly positive. Equities are up 4%. Might end up with 1.5% this quarter. We've got a few more weeks to figure that out. See what Chairman Powell says tomorrow, because he's really not, he can really spoil it. He's done it before.
You keep all those 0.7%, and Alan's not going to be happy. I have to dig up another jar in the backyard and watch the moths fly out.
So, share this with you. And we have good years, good quarters. We rebalance and we take the winnings and we push them over into the bond area. And then when Bill needs money for expenses, he taps into the bond area, so that's how it's always been done. The bonds are dry powder. If we have a down period in the equity market, bonds will be just fine. Got a little bit of exposure with the high yield, but the rest of the bonds are gonna fare nicely. And so when we rebalance, when equities have been gone down, historically they go through these cycles like that. We rebalance using the fixed. Now, there was an article published in the journal a couple weeks ago based on a research piece done at Boston College, which is, they have a department there that is probably the foremost research in the pension area, Boston College. And the article talked about how many of these pension plans have forayed into private equity. They get too much. They have way too much exposure to illiquid investments that are, you can't get the money when you need it. You get it contractually when they say you can. It could be 7, 8, 10 years out. You don't have those issues here. You don't have a liquidity issue there. Everything you have is liquid.
So are you making any recommendations to us at this time on adjustments on as to anything right now?
I think you're appropriately, allocation is appropriate.
Okay. I'm good with that. Does anyone have any specific questions? Brett,
No, sir.
Jonathan?
Nope.
We have anybody? We don't have any other board members on the Zoom or phone, do we? Okay.
Category, we have specific targets, but we don't have it in your policy or the other two. We don't have ranges. And, but we have ranges in many of our policies. So what I'm going to do is present to you at the March 15th meeting, an amended policy, which provides ranges. The ranges simply safeguards. Put them in your policy. We can discuss that at that.
So the ranges are low and a high as to our goals, as to,
So for example, if
is that really necessary? I mean, we adjust the percentages based upon recommendations at each of our quarterly meetings. So why do we need a range to work with?
we've done, I think it's worked well over the years, leaving it the way it's now, status quo. With the ranges, and I don't recommend you change the current policy, but, and I just saw it share with you what the police asked me to do. And we still like to do what we do, and that is keep things pretty much in line with the targets. We will allow us to at least to run above the market requirement. I don't, what the range might do is strings a little bit, but
So I don't have strong feelings either way. As far as I'm concerned, we come into these meetings and we largely react upon your recommendation as to our allocation. If we established a range, we'd be reacting to your recommendation as to where the range is. Yeah, me too. That's my personal thought. Anybody have a different thought about it? I mean, Okay, so Mr. Chambers, we very much appreciate your report and your advice, and you're helping us kind of add some clarity to what we don't otherwise know.
Do you have any questions about actual smoothing and those kinds of areas?
What, refresh me, Jill. I know we agreed to seek the input. Do we actually put that out? We have somebody who's working that for us? What we had talked about earlier, where we talked about doing an actuarial assessment
Oh,
or,
that, yeah, you've already had the experience study done. So in the March meeting now, Patrick will come back with an evaluation report that compares real to what he's proposing, so that you'll be able to see what he's proposing that the city needs to contribute next fiscal year.
anybody have any questions about any of that? Anything at all? Okay, so we'll move on then to Ms. Parrish.
Do we need to accept the report?
Oh, okay,
We
motion,
accept the report.
further discussion? All in favor?
Aye.
Opposed? Okay, Ms. Parrish. Hello? Is Ms. Parrish on the phone?
Hey, can you all hear me?
She had said that she's had to call in because she's juggling several meetings at the same time. So hopefully it's.
Can you all hear me?
Everybody wants their meeting next week, so everyone wants it this week, and so she's kind of.
Well, maybe she'll,
Parrish, I
Back
can
to
hear
us.
She
you.
really has no report
okay,
for any of the meetings this
Okay.
particular time.
all right, well, if she pops back on the line, then, you know, she
Can you all hear me?
assume she has no report.
Ms.
Board
Parrish,
meeting
I can,
scheduled for 2022.
Mr. Manager,
I'm
Mr. Chair?
signed on. It's showing that I'm on, but.
The other two pensions have accepted these dates proposed by was proposed by.
Ms. Parrish, I can hear you, but they can't hear me either.
Mm,
Okay,
Thoughts,
that's the
anybody?
part. I can hear you, but for some reason they can't hear us.
Right.
Motion,
Move to accept.
Weird. I haven't
That
had
is
any
weird.
issues all day.
Second.
so that's
Okay, well, I'll
3:15,
have to send
21,
Jill an email.
9:20, and 12:13.
Okay.
Okay.
Anybody have any further discussion? All in favor?
Aye.
Any opposed? Expenditures.
It always is.
Does anyone have any particular question about anything that they're seeing on here?
I just had a question. How pension takes into account. Say an employee.
Right.
Yes, it is.
That, if you look on the summary,
Yeah,
the
baby.
last one out there is what the city contributed for those who left without being vested this year, this fiscal year. It's an estimate. No, it's the 654,000. But the actuary does, yes, they figure that they figure an amount. I'm just giving you what is the estimate from this year.
It's a matched amount.
You want more fruit? What fruit do you want, babe?
We can hear you now, Anna.
Give me your question again, I'm sorry.
Okay, let me rephrase it.
Yeah.
And I'm just trying to understand this a little bit better. So I see this number, 112,252.44 contribution, assuming WD is withdrawn.
What kind of fruit do you want, babe?
You want to mute her?
What kind of fruit do you want?
Um,
Do you want any other fruit?
There we go.
Here we go.
I'd like some fruit.
You're looking at 151,000.
So 112,252.
Those are the actual contributions, their portion of that contribution
Yep.
that was withdrawn. The 654,805 is what the city put in.
Okay, so that's the
during that same
match to
time.
their withdrawn
Yes,
contribution.
yeah, and
Okay,
It
Thanks, still
varies
remain.
by year.
yep.
You know, some years we're contributing 35% of salaries, sometimes we're contributing more or less.
Yes.
So that's why that number is really an estimate, just based on this year, because I can't go see every year.
Mhm.
But
So just because I see it standing out there, what does it mean that we had to reissue the 1179 to B Fisher?
it means that either the check got lost in the mail, or the person got the check and lost it. Or so then the pension bank, if it's out there for a certain period of time, they void it and then they have to reissue it.
So it may be out there for another period of time again,
Yes,
and we don't know if it's been cashed or not this time.
no, it just stays.
Never mind, that's okay. Enough
Yeah.
said, enough said. Cool. And if they do it a couple times, then never mind.
Well, it was done a couple times on that one, so.
Okay. So does anybody have any other questions about the expenses?
None.
Okay, if there's no questions, then I guess if we're accepting the various reports, then is there a motion to accept the report of expenditures?
I'll make a motion.
Second,
Second.
any further discussion? All in favor?
Aye.
Any opposed? Any public comments? No one's here. Let the record reflect. I don't know if anybody's on Zoom land. Anybody has a public comment? Miss Thomas or Miss Parrish, can you hear me now?
Yes, sir, I can hear you. Can you hear me?
Yes, ma'am, we can hear you now. How
Okay.
about you, Miss Parrish? Okay. So did you have anything to add, Miss Thomas?
No, sir, nothing to add.
And Miss Parrish still doesn't seem to be connected to us.
Yeah.
Can
So-
anyone hear me?
Yes.
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 Hooray. I'm so sorry for any background noise that you heard. My kids are home with me. And for whatever
want
reason,
some-
you couldn't hear me, of course, until I started yelling at them. So
Yeah. What kind
I
what
would
kind
like
of
some
fruit?
fruit.
What kind of
I
fruit
know,
did-
I know.
What kind of fruit did they decide upon?
They decided on grapes and watermelon. So I'm
Okay,
sorry
cool.
about that.
Good deal.
Yes. As Jill mentioned, no news is good news for me. I do not have anything to report on, but I apologize for the issues.
No apologies necessary. It happens in this world we're living in these days. And
Yes, yes.
certainly
And,
all of us have kids, and so it's
We
that
do.
is a non-issue as far as I'm concerned also.
Thank you. I appreciate that.
Would have liked some of the fruit though.
I know. Fruit, pasta, vegetables. It was a good dinner for them.
Good. All right, then is there any other business to come before the board? None? Motion to adjourn? We already did that. Wake up. You were thinking about fruit, weren't you? All right, then motion to adjourn? We're gonna adjourn. I think that's one that doesn't require a second, I believe, so it's adjourned. We're adjourned. Thank you.
Happy holidays, everybody.
Happy holidays to you.
Thank you.
Thank you, you too.